Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, March the 11th. The year's 2021. Let's talk trading. Reasons not to enter part 2 with Walmal. And just remember, these videos are for educational purposes only. Your results may differ from mine. Oh, and somebody asked me what indicator I use to make these screens. It's the TRO, My Notes indicator, and you can have up to 10 notes here, and of course if you change the tag then you can put multiple copies on the same chart. You can turn it on and off, and it has something that I call subliminal mode, where you'll have it up here and it'll just be flashing, but it'll be like subliminal messages. So like it might tell you to like always put your stop loss on or something like that. Anyway, that's how that indicator works. So I hope that helps the trader who asked about it. So Walmal, yesterday we ran out of time as usual about talking about reasons not to enter. So what other reasons do we need to talk about for the traders out there?
Well, it's funny because we were just trading together a few minutes ago, and and we both like to go and use that idea of the DSR trade, which I know that you've put an indicator out there for, and the idea is that you wait for a three ball on the bottom, and you wait for a close, and a close above that. In other words, a higher high, and then you go and enter on that. But we just ran down all this far, and theoretically or technically, you could have had 1, 2, 3, 4. I see 4 entries on the M1 chart, and every one of them would have been big losers. And you have to go and ask yourself, well, is there something else that I should be looking at? And that's the whole thing. Are there other things that you should be looking at? And for me, the obvious thing, the reason why I didn't take those trades was because, the move hadn't stopped. The move was still going down. So am I paying attention to what the chart is actually doing, what price is actually doing? Why would I enter to go long if we're still moving down? Sure, the DSR could be great to catch that V move, but how often does a V move really happen? It happens, but it's the majority when you look around is it comes down, it settles in the bottom, and then comes back up. So you look for those type of trades, the DSR trade, when that happens, because then it keeps you out of all those other bad trades. So, that's the whole thing. Look for a reason not to enter. And, I like the idea is, we all have got methods on how to go and pull the trigger. But do we have a method for not pulling the trigger? I wonder sometimes if we do that, and that causes some problems. I was talking to a trader yesterday, and he's getting into the Walmal method, and the thing is, and I said to him in I think it's on either Facebook or YouTube, I don't remember. I said, yeah, sure, you can go and enter that way, but I probably wouldn't do it, or I certainly wouldn't do it without having a lot of experience, because, it's the type of thing where it could possibly get you into more trouble than it's worth, and that's what you have to be careful with. Sure, you can enter there. You can enter any way you want, but why don't we go and just try to take the safer trades? It may turn out that you knock out some trades that you normally would have taken. And sure, you're going to probably knock out some winners, but more than likely you're going to knock out more losers than you're going to knock out winners.
Right. And yeah, because you were saying reasons not to take the trades. Well, we look at the range of the hourly candle. That's one of the things we're using to base our trades, especially with the Walmal method. And the previous 4 hours were, we had a 21, which was the biggest, and we had an 11, 3 bars ago or 3 hours ago. And it's just like, man, something's got to give. And that last hour, it gave, because usually we're looking at somewhere, 20 plus pips or 30 plus pips, somewhere between 20 and 30, almost every hour, when we look at the frequency distribution, per day and per hour. We've got it, narrowed down pretty well.
Right.
And you can see price is moving back. And for you fib traders, you can see the distance between the 2 ball and the 3 ball right now is 15.2. Well, that's almost half. So you look for that, 50% Fibonacci retrace if you believe in that, or if you trade that.
Right, exactly. And so, one of the things I would make a suggestion on, we have our method, we write our method down, we commit it to memory, we may even have it written on an index card, or put it into your mind notes and put it right up on the screen so you don't miss anything. Why don't we go and make a list of all the reasons not to enter a trade? And also, so we have a checklist to enter the trade, and we also have a checklist not to enter the trade. And just make a list of all those different things that would persuade us not to go and jump into a trade too early. Now the thing is, I saying all that,
or too late.
Or too late, yeah, absolutely. I did eventually get into. I took a couple of trades going to the south because I saw it. And I saw some price movement going that direction. I saw some retraces and some good entries. And I took some pips going on the way down. And to be honest with you, when I finally got all the way down to the 40 line, I entered down at the 40 line and got a really good trade down there. Why? Because what I saw was price was running out of steam. And as it was running out of steam, that's telling me, okay, we're probably going to start. There's a possibility here. We've had a big long run, biggest run of the entire day. We're running out of steam. The bars are getting smaller. So all those reasons not to enter the trade weren't there anymore. And so I went and jumped in. And when I got out of that trade, I wound up getting out of that trade with about 8 pips or so, which is for a DSR trade, which is pretty good because most of my DSR trades are somewhere between 3 and 5 pips. So for me, that's a pretty good trade.
Yeah, and the other thing is, you said running out of steam. You can look at the candle ranges and you can see if they're starting to decrease in size. It's running out of steam. So that would be a reason you don't want to enter the trade. It might be a reason to exit the trade if it's going your way. And it
exactly,
looks like
because
price launched out of the 40s again there, Walmal.
Yep, it did. That was actually the trade I took. Was when I got in. My trade where I got in was down at 42 even actually is where they put me. And I tried to get in a little bit earlier than that, but they, what happens with brokers sometimes.
Yeah, I know.
But here's the thing. Right now the trade is up 17 pips. I got 7-8 pips of that 17 pips. I'm happy with that. I got what I expected. And the thing is, if I would have stayed in that trade, I would have gone through about 5-10 minutes of just chop back and forth, and with all that angst on me. And for me, I'd rather just get out of the angst. I know my brain. I know how I operate. I don't want to be in that angst. And I just would say, you know what? Just cut it right here. Put some money in the bank. That's 3/4 of the amount of money I need to make for the day. And I know that there'll be another opportunity. At some point in time today, there will be another opportunity, and I'll take that other opportunity.
Yeah,
and the nice thing about it is that
I was going to say, did you get the Walmal trade just now?
Yes, I did. So I'm in that right now.
See, it's funny out there, fellow traders. While I'm making the video, I usually hardly ever put trades on. Walmal puts trades on while he's talking.
Yeah. Now the thing is, to that trade of the yesterday, would you take the first trigger or second trigger? Usually, I take the second trigger. Okay. Why did I take the first trigger on this? The reason why is look at how big those candles are on the way up. Look how fast it's moving up. To me, that's a momentum across that line. And so, until I see signs of that momentum dying, I'm just going to go and take the trade. So, like right now, I'm up about 2.5 pips, and I'll take the chance. It actually went to 3. My stop loss is now at -3. So the most I'm going to lose on this trade is 3 pips. So we'll see what happens. It may go all the way up to 70. That'd be great, or it just may stall here, and I get sick and tired of it sitting there, and I just get out. Or I'm just, in fact, what I'm going to do right now is I'm up 1.5 pips, 2 pips. If this candle does not close higher than the previous candle, I'm going to get out.
Yeah.
So we'll see what it does.
On reasons not to trade also is as if you're getting anxious. It's like you're sitting there going, hey, how, you haven't traded and you just want to trade, and you basically do what we talked about yesterday is the confirmation bias. All you're doing is looking for reasons to enter. And it's almost like, well, hey, if you're not getting reasons to enter, maybe you shouldn't enter, or maybe you're looking for the wrong reasons. Like if you're looking to go long and you can't find any triggers to go long, then you're going to probably get frustrated, maybe just jump in, as opposed to saying, well, wait a minute, I don't see any triggers to go long. Maybe I better look, see if there's triggers to go short.
Yeah, I just got out of that trade, and the reason why is because we had that doji, and it closed on that doji, so I got out right at the close of that. So I didn't pick up much. I picked up 2.1 pips. But you take that and the 7 or 8 pips I made on the last trade, well, that's core for the day. I'm done for the day. So, that's a good feeling.
Yes, it is.
And you just need to know that that's what you do. And the other reason why I went and jumped out so quickly on that is because I didn't wait for that second trigger. So I know that I didn't jump in early because it was part of my plan to go and do that. But at the same time, it's not my normal method, and therefore when I'm not looking for my normal method, I'm looking for an explosion on the momentum. So I would have anticipated that to go all the way to 70. It didn't. So therefore, just get out, take the 2 or 3 pips that you can get on the table, that you got on the table, and put it into your pocket.
Right.
And maybe you'll get another trade. And that's part of the reasons not to trade too, because if you don't have that experience to be able to go and judge that and be able to see how the market moves, maybe that's the reason not to take that type of trade. Because I'm going to be honest with you, that was a little bit risky for me to do that, but I did it because I knew I had a plan to get in and I had a plan to get out, and so the reasons not to take it didn't outweigh the reasons to take it.
Okay, we just went across the 60 Walmal line. Did you take that trade?
No, I did not. I didn't take it, although that would have been a legitimate entry because that would have been the second on M5. That would have been the second crossover on M5. But I did not take that trade, mainly because I was playing with something else on the screen. Otherwise, I probably would have taken it.
Okay, I just switched the chart to M5 for the boys and girls and non-binary traders out there, so we can take a look here.
Yeah, so I mean, right now on my chart anyway, you'd be up a pip. So it's I don't know if it's going to go any higher or not. Hopefully it does. For anybody who did take that trade, but but who knows what it's going to do.
And that's something that you have to realize on any one particular trade. You just don't know what it's going to do. And if you look at the chart, you see here on M5 we had 1, 2, 3, 4, 5 red candles, and then we have 1, 2, 3, 4 green candles. So it's almost like you're pressing your luck here. It's like, well, wait a minute, how far is it going to go?
That's exactly right. The only thing that would put me into that trade, and that's really what the other reason why I went into that trade in the first place, because on the M5 you see that really, really big candle that came down. I know you call them return bars, so I just know that a lot of times, it will go and fill that entire return bar. I like to go and, get out right around the midpoint of that, and guess where price went and stopped? Right at the midpoint on that first 5-minute candle. It's kind of funny that it actually turned around right at the midpoint on that candle. But it does that so often.
On your charts, mine got a little bit above the midpoint.
Oh, did it? Okay. Yeah, that's the difference of brokers, I guess.
Yeah.
But and that's another reason maybe not to enter a trade, because if you see that, hey, we got a return bar, it's going to draw that into that. Yeah, that's great, but then you go and look and say, hey, wait a second, the midpoint of that return bar is only a pip above where I'm at. Well, maybe that's not as big a draw as you think it is, and maybe that's a reason not to go and enter the trade, because there are better opportunities that will come through on the day.
Yeah. But as usual, the fastest 15 minutes of trading is up, fellow traders. So hopefully, you've taken some notes, or maybe just watched a video of these last couple of days videos again, and you might have some. You might add a couple of tools to your toolbox to keep you out of trades that you wish you had stayed out of. So, when you're sitting down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.